Hey, how's it going, everyone? My name is Derek Afasi. I'm the owner of Afasi Financial Group. Today's topic, I want to discuss with you, are annuities a good investment? And this is one of the questions that I constantly get into my office regarding annuities. So I want to kind of dissect the pros and cons of the different types of annuity contracts and then help you distinguish whether or not it may be a good investment for yourself. And it all comes down to the fact of kind of retirement. What exactly you're doing for your retirement and what exactly is this whole goal towards the investment that you have created for yourself, whether this is in mutual funds, 401ks, IRAs, 403bs, whatever that is. So essentially with any sort of retirement plan, typically 90% of them are invested into mutual funds. So the way that your retirement plans grow is the contributions that you place into it, meaning if you're placing, a monthly number or an annual number into your 401k IRA accounts, it's that money and the performance growth of your mutual fund, which will equal how large that retirement bucket is at the end of the day, which seems pretty simplistic, right? Well, unfortunately, individuals were tied into this hopium factor. And they said, okay, well, the market should always increase. And typically, throughout the length of time, since the inception of time, the market has always increased. But there's some hiccups and corrections along the way. So from 1980 through 2000, when majority of baby boomers or individuals that are pre-retirees that are looking to retire within the next 10, 15 years, they were placing money into their 401k accounts, into their IRA accounts, and it was the combination of their money and whatever it was tied to, typically those mutual funds, would equal how large their bucket was. So from 1980 through 2000, there was a 1,000% growth in the market, meaning that essentially anything that you were placing into your mutual funds or into your, your 401k accounts was doing amazing. But therefore, what did I tell you? It's the correction. That's where everything kind of goes by the wayside, and this is where, okay, how valuable is this bucket of money? How valuable? What exactly can I do with this bucket of money? It's not just a number that you're receiving every single year off of your statements. This bucket is going to be the most powerful thing, because essentially when you come time for retirement, you are going to have to pull from this bucket. And you want to pull from this bucket and make sure that you do not outlive this bucket. And that's what the majority of retirees and pre-retirees, what either they're panicked right now or why they cannot properly retire. And the reason being is right after that 2000, so then now you have 2001 to present, you've had a couple of hiccups and a couple of corrections, and especially 2008. The average portfolio in 2008, now this was after contributions and whatever the fund performance was, the average portfolio lost 57%. So if you're banking on, let's say you had this bucket of money that was growing and growing and growing, you just keep max funding this bucket, whether that's in just individual mutual funds or IRA or 401k account, whatever that is. And then let's say you had $1 million in that bucket, and you were one of these unfortunate individuals that obtained a loss in 2008. Even if you took a 50% hit, your bucket your entire mindset has shifted, realizing that, okay, I was involved with an investment the entire time. So so you really have to distinguish what exactly is your goal for the investment realm. Is it to just, hopefully that your money will grow and eventually you could utilize that money that grows and just take a vacation out and it's a short-term goal? Or is your investment goal tied to retirement? And that's where annuities really come into play. And it's because annuities provide you with contractual guarantees through insurance companies. They provide you with contractual guarantees on this bucket of money. So you could either utilize an annuity for if you're trying to accumulate your bucket of money, or you have those 10, 15 years left where you're trying to defer and get to the finish line of retirement. And if you have that income goal of saying, yeah, of course, this retirement account, this was meant for income at a later date. This wasn't just meant to just sit there and just understand that I had this large bucket of money. This was meant for my retirement income. And that's the beauty of annuities. And this is why I really like explaining annuities and explaining the annuity concepts, because essentially you could utilize annuities, and all it is it's a certain it's a kind of like a chassis. You have to think about this bucket is, you have your old IRA, you might have a 401k after you severed employment, whatever that is, but you have a lump sum of money. So rather than just constantly playing the market and seeing your money go like this and having those panics, and constantly saying, what exactly do? I don't know what to do. I keep trying to research, but I'm not exactly sure. I'm thinking I need to have the proper investment. It's essentially, you have to tie your goal to exactly what your investment is. If it is just to have unlimited amount of growth potential, and you could have unlimited loss potential, then you should be going into something more risky. You could be going into those stocks. You would be going into those mutual funds, those heavily aggressive mutual funds. But if you're like majority of the individuals that call my office, you just want to see safe, consistent growth on your accounts to get you from point A to point B. Right when you get to point B, meaning your retirement years, whether that's 62, 66, whatever that is that you want to take this bucket, you allow this bucket to come out to you with a lifetime income. And that's, in a very generic concept, that's how annuities serve their purpose. So, you have a couple of different types of annuity contracts out there. You have some that are good, some of them that are really bad. So I want you to really dissect and understand, which ones fit your specific situation, because there's hundreds and hundreds of annuity contracts out there. But essentially what you're doing, and how whenever you're looking to purchase an annuity contract, is you're taking lump sums of money that were already pre-existing. So whether this is in regular cash, whether this was in an IRA account, or is it in an IRA account, an old 401k account, an old 403b account, and essentially what you're doing is you're leveraging the annuity to provide peace of mind. And what I mean by peace of mind is you're trying to provide max income in retirement that you can never outlive. Okay, so if you had a cash, let's say that you're 50 years old and you've accumulated, we'll go each by line by line, but let's say you've accumulated $200,000 in cash, and you say, okay, well, I kind of invested in mutual funds, but anytime I do that, sometimes it does very well and then sometimes it does poorly, but I want to utilize this cash to provide me with retirement income at a later date. Well, what you can do is you could take a portion of that cash and you could purchase an annuity contract, a deferred annuity contract. And there's different types. You have the index, you have the fixed, you have the hybrids, and essentially allow your money to grow on a very safe, consistent basis and eliminate downward market loss to your account. There's a couple of really cool strategies out there that allow your money to participate whenever the market goes up and flatline, not lose a penny whenever the market goes down. So essentially, if you're 10 years out or 15 years out, whenever that is, your accounts could either go up or flatline, go up or flatline. So you get to participate in safe, consistent growth on your accounts. Now, once it comes time for that retirement, you execute something known as an income rider. You execute your lifetime income option through that sort of annuity contract. So it's very, very basic. Now, please understand, if you're utilizing cash accounts, it's not necessarily the entire lump sum that you have to place into annuity contracts. Annuities, they serve their purpose, but because there's such high contractual guarantees through the companies, you could leverage the smallest amount of dollars possible to get to your ultimate goal. Remember, the most important aspect is the goal. So whether or not an annuity is a good investment all depends upon what your goal is. If your goal is meant for income, annuities work perfectly. They work perfectly for max income at a later date in time. If your goal is safe, consistent growth that you want to eliminate downward market loss, annuities could work perfectly. But you have to understand kind of the pros and cons of each, because there's certain restrictions with annuities, and you have to understand, okay, what exactly are those restrictions? Can I pull my money out at any time? And depending upon the contract, depending upon the company, there might be certain limitations on how fast you could pull that out. You might have to wait 10 years to receive 100% of the full liquidity on your account. There's companies that you could pull out up to 10% per year. So if in case you came to an oh my gosh moment, and there's a couple different ways on how you could really leverage all hundreds of the top annuity contracts out there for your specific situation. And that's one of the things that we try to do here at Afasi Financial Group and call the number on the screen, the 1-800-566-1002, is we try to help you distinguish whether or not an annuity may be right for your specific situation. And then on top of it, we have proprietary software and proprietary relationships with these companies, making sure that if you are interested in an annuity, you can leverage the best possible annuity out there. We're contracted with all the top carriers, with all the highest quality companies, and have the highest contractual guarantees. So it's not just one company, it's a one-size-fits-all product. If you're age 50, there's a correct annuity contract for you. If you're age 45, there's a correct annuity contract for you. If you're age 62, there's a correct annuity contract for you. So it all depends upon whether or not this is good does it fit your specific needs? So, kind of back to the examples. If you have a cash account, you can utilize an annuity. If you have an old IRA, you could utilize a portion of that into an annuity contract to eliminate the downward market losses, and also utilize your goal if it is the max income or whatever it pertains to your specific situation. Now, where some of the cons come in is the restrictions on how much money that you could participate in. And you're going to see videos and there's this constant war that's being battled between safe income planners and wealth accumulation specialists. And wealth accumulation specialists, they're constantly harping on the return. Well, and the safe retirement income planners, they're saying safe, consistent growth. Make sure you have safe, consistent growth, and make sure that you have that max income so you have that peace of mind during retirement. I'm more of that safe retirement income planner. That's my mindset. It's just the way that I think. I would rather tell somebody this is exactly worst case scenario, this is exactly what you will receive at the end of the day, than always focus on the return. Because what happened with in 2008, and unfortunately what's happening with all the retirees right now, is they're going old school planning, and they're leaving their money in mutual funds, whether that's their IRA accounts, their 401k accounts, and they're leaving their accounts in mutual funds, which is susceptible to downward market loss. And it doesn't just go with downward market losses. That's not the only negative to it. If you're looking to take a 401k account or an IRA account, you're trying to take money for that for retirement, you have mutual fund related fees, okay? Typically the advisor, the wealth accumulation specialist that's going to monitor your account, you're going to have to pay him a fee. He's not going to work for free. So that's an advisor fee, which typically ranges about 1%, and you might hear something known as a wrap fee. So you might have a mutual fund related fee of 1%, an advisor fee of 1%. If you come into a downward market loss, we're not even talking about the 57%, but let's say if it's only 10%. Right there, a negative, a negative, a negative, and then let's say you try to take out 5% of this bucket. You only took out 5%, but you lost 17% of your value in just a 10% downward market loss year. Because remember, this advisor fee is always going to come out, regardless of your account going up or going down. So you have to really understand what exactly are the best options out there. And that's one of the things that we try to do, is we're giving you free education. You're able to speak with us specifically for your ideal situation, and we do not charge a fee for this, because we want to make sure that trust is established right from the get-go. We understand exactly how many individuals we touch. This is why I create this free content for you, is to really put your mind at ease and really try to make you confident regarding your retirement planning, regarding what type of money that you want to place in what your idea of an investment is. And that's why, I highly believe in annuities. I've seen them do excellent things, but not if it does not pertain to your specific situation. So please give us a call. We implemented 24/7 customer service. You could call us at any time. It could be Saturday or Sunday, and someone will be able to help you. Just say, I'm interested in either learning more about annuities as an investment, or I'm interested in annuities, or I just want to speak with a strategy specialist, and we'll make sure that you get sent over to the correct department, and someone will put your mind at ease and will really help educate you, and not tell you about a product, but educate you first and foremost, making sure that you understand exactly what you have and your goals, and you have that clear picture, and then whether or not which steps to properly take from there, and some recommendations. But once again, you have nothing to lose. It's completely free to give us a call, and I really wanted to implement that, and really wanted to make the education is key regarding retirement planning, retirement income planning, and annuities as an investment could be utilized very well with your specific goals. So once again, this is Derek Afasi. I hope you learned something regarding this this video, and please subscribe to my YouTube channel, Retire Sharp, and just leave questions, comments, and hopefully I'll be the one who speaks with you. But if not, I have my other representatives, and just give us a call, and hopefully we can help you out. All right, thanks guys.